And this is the most common subject we are going to study, that is advanced financial management. Now, all of you have done the first session, and I'm very fortunate and happy that most of the students has attended. No need to remind anybody, and it is great to see this attendance and hope you continue with this attendance throughout the online sessions. Just a bit. I'll join from other device also. Commerce and minor, where you will find your new syllabus will be there, and please refer to this syllabus only. Check out what happened. Mm, because when you click on any other syllabus, there are confusion about what the syllabus you are going to follow. And in that syllabus, you're not clear about how to do it and what to do it. So the new syllabus we are uploaded in 2026. So the same syllabus you need to follow for your purpose. So your subject code for this semester, Advanced Financial Management, is 602, and this subject is a core subject for your specialization. So I hope your syllabus is visible to you. Now let's start with understanding the syllabus. First, your subject has 3 credits and it is consist of totally 2 lectures, 1 tutorial and 1 practical. So daily I'm going to conduct in the morning advanced financial management lectures just to make you understand, because it's a fresh morning, you can understand the subject. The most important part about this subject, you have 50-50 chance of numerical and theory. So you cannot keep this subject as no numericals. The weightage for numerical and theory, it is given as 60-40. That means the numericals are going to be for 60 marks and theory is going for 40 marks in case of 100 marks paper. Now your syllabus is of 40 marks internal, 60 marks external. So for this subject, your 36 marks will be for numerical and 24 marks will be theory. So you cannot keep anything as optional, because 24 marks theory will be there, and out of theory, if you want to score the good marks, then you need to have the better score, then numerical should be there. Secondly, let's talk about the syllabus more in detail. I'll just zoom it for your reading purpose. The first chapter is about corporate restructuring and corporate valuation. Now, what is a corporate restructuring? The corporate restructuring talks about how the people are changing their organization, how they are changing their role in organization, and how they are making the organization more valuable. So, corporate valuation and corporate restructuring talks about merger acquisitions, takeovers, handling their debts, and importantly, making the firms more and more profitable. In short, in the first unit, we have 90% theory and 10% numerical. In first chapter, you're going to understand what is meaning of restructuring and reorganization. To be just introduced, restructuring means shuffling the roles in organization, changing the pattern, changing the method, how the work culture process are happening in organization. And reorganization means I'm doing mergers, acquisitions, takeovers, or I'm just selling out non-productive assets of my organization. So it means how I'm managing my business is going to be redefined. There is some issue about the technical glitch. I'll rejoining the other screen. Meantime, I'll continue the same. The screen will be visible shortly. In case the second part of my syllabus, we have the cash flow and fund flow, which you already learned. Now, what is different between that cash flow which you learn in second semester and third semester is in second semester, you are expected to solve the cash flow and fund flow numericals. In third semester, they have not mentioned the numericals on cash flow and fund flow directly, but even though they are said you need to calculate, but for examination purpose, they notify that numerical of cash flow will not be there, but numerical of fund flow only will be there for your examination purpose. The next part of your syllabus is most important, financial distress. The financial distress talks about the financial distress talks about how you're going to deal about the load in finance. I mean to say, in finance, there are some issues like your payment issues, your receivable issues, and so on. How you're going to manage them is called a financial distress. In financial distress, we have to learn about how we are dealing with the outstanding debts, how we are dealing with the unfortunately my second device is not working, so I'm sharing from the first device only. So I'm talking about financial distress. In financial distress, we are talking about suppose I have to pay 2 crores and I have only 50 lakhs. So how I should manage? How I should go for? So this concept we are going to learn in financial distress. The most important thing we are going to learn about in the first unit is economic value added statement. Now, what is economic value added statement is? It is a statement where we have to understand how the things are added to your productivity. Because when you are doing a production, there are some things which are not necessary and some things which are relevant and very important. So how you're going to adjust, how you're going to do that all things, it nothing but your economic valued statement. In economic valued statement, what most important is the categorization of all the things as operational and non-operational. It means there are things which are administrative, there are the things which are non-administratives. How I'm going to manage all these things, I need to understand in economic value state. In second unit, there is a call capital structure and firm value. My dear students, this is the most core part of your syllabus. In capital structure and firm value, you have different theories of capital. These theories was also present in your second unit, but we have not studied the numerical part more. Now, in this unit, we are fortunate to discuss more and more details about these theories. The first theory is net income approach, where capital is valued on based of only income. So if I want to invest somewhere, or if I want to decide whether I should purchase shares or not, I need to think about how much income I'm getting. So that is a net income approach. The second approach we're going to study is net operating income approach. Now, what is net operating income approach? The net operating income approach says the income which I have generated and the operational income which I generated, they categorize. Because some income I'm generating out of what I say non regular expenditures. And in that case, the income is considered as non business. So, this non business income is not a regular activity because this kind of income is possible once a while, twice or thrice. It is not continuous. So, considering this, I take a decision about investment. Then there are some traditional financial scientists like Moodle and Miller. They have proposed the different positions like taxation, trade offs, and signaling. So, we are going to study all these three theories. And throughout AFM, the Moodle and Miller are the most important people who want to contribute 2 units of your syllabus. The next important thing we are going to study is PBIT and EPS analysis. Now, what is a PBIT and EPS analysis? PBIT stands for profit before interest and taxation and earning per share. It means if the firm is generating profits, suppose I generate 1 crore profit and I'm only giving 50 lakh to my shareholders. So how much per shareholders I'm earning? Because when I purchase the shares, I purchase shares at market price. I'm not purchasing shares at basic price. So if I'm purchase share of 1,000 rupees, what is my earning? So I need to analyze this, and based on this, sorry, based on this, I had to take a call about how to progress further for analysis of this investment. Then the next is ROI and ROE analysis. ROI stands for return on investment, and ROE, it stands for return on earnings analysis. Now, what is investment? Investment means the capital which I have invested, whereas return on earnings, or I can say return on capital employed, is means my investment plus reserves I'm going to consider here. Then I have in the last the leverage ratios. We already covered in unit 2 of financial management, the financial leverage, operational leverage, and all these ratios. Again, they are going to study it here. Then in the last, there is a guidelines about capital structure planning. These guidelines are normally asked as a MCQ. So considering the total structure of second unit, in second unit, you have 50% chance of theory and 50% chance of numerical. Now let's move further for the third unit. Your third unit is capital budgeting. Now, if you just scroll down the numericals part, they have decided that in this unit, they are not asking the capital budgeting numericals. They are asking numericals regarding scenario and risk in capital budgeting. So if you're thinking that, okay, I know the NPV, IRR, payback, and so on, it is there. But the numericals are asking on capital rationing and sensitivity analysis. Now, what is difference? In previous financial management, you have the numericals that this is a project, calculate payback period, calculate net present value, and that's all. But in this semester, you will be asked numericals where 2 or 3 projects are given. You have to decide how much money out of available funds to be given to which project. Because ultimately, the rationing or giving the funds is most important. So the capital budgeting chapters, we are going to deal about how the allocation is done. So if you see the contents of this unit more talks about comparison of net present value, comparison of IRR, comparison of profitable index. So instead of just calculating the NPV, IRR, payback period, and so on, we are going to compare in this chapter. So the first part of this unit will be a numerical. The second part, risk uncertainty, source of risk, adjusting capital, rationing of capital. So this part will be theory, and here the chance of numerical and theory will be 60-40. 60% numerical will be asked and 40% theory will be asked. Then in the lateral part where the project selection, sensitivity analysis, in here again numerical will be there. When you're talking about role of qualitative factors, again theory fast is asked. Like in capital budgeting, we have qualitative part like who is the owner, what is his foundation, how much his wealth, how much he is doing investment, and so on. So all these things they are going to ask the theory. The next part or the fourth unit is working capital management. Now, if you just highlight the last part of this unit, they are strictly mentioned the no problems on working capital estimation will be asked. So in the fourth unit, we have working capital management, maximum theory part. Again, if you just scroll down, they are asking numericals about collection period, receivable management, and bad debts, then percentage of sales method, and so on. In the financial management, which we have calculated working capital by using total cost method and sales method. So in this syllabus of AFM, we are just going to calculate bad debts, receivable management by using sales method. No numericals on total cost calculation of working capital will be there. If you see the contents, the first unit we got 6 plus 2, second 7 plus 2, third 5 plus 2, but here we have 9 plus 2. And this chapter, maximum theory questions are expected to be asked. So in this chapter, we are going to understand the working capital by means of the practical applicability regarding liquidity. We are going to study if my working capital is so and suppose my working capital is 100 rupees. I have only 55 rupees. How to manage that remaining 45 rupees which are required for myself? I am going to study and I'm going to analyze for my business. Whether I need to have a short-term loans or whether I should take the cash credit, bank overdraft, or I should restructure my debts. Everything I'm going to study in this chapter. The last chapter or last unit of your syllabus is dividend policy and firm value. My dear students, this is the most critical chapter because again here you will find Moodle Miller is there, Walter is there, then Boom is there. So there are total four different theories which are going to talk about how the dividend and firm value decided. To just make you understand, suppose you have taken shares of my company. Every year, I'm not paying any dividend to you. Whether you're happy about investment, definitely you're not happy because for you, the investment is required return. And if I'm not able to provide the returns, it's something weird. I'm not able to give the justification. So in that case, the people who are investing money, they will be reluctant. They will be having concerns that why we should continue the investment if you're not giving returns. So here we are going to talk about how the returns are given to the investors. In this unit, if you can see, we are talking about payment of dividends. So there are three types of dividend. One is interim dividend, final dividend, and advance dividend. So how we pay that dividends, how the tax allocation is done, how we ascertain the value of dividend, and based on that, how I can change the investment pattern in my organization, we are going to study in the fifth unit. In this syllabus, they are mentioned the different factors affecting dividend policy like legal procedures, bonus shares, stock splits, buyback, and valuation. Now, legal procedure we'll discuss when we're discussing the syllabus in detail. The bonus shares, we already know that if on 5 shares, if I issue 1 share, it's called bonus shares. The stock splits means a right share where instead of 1 share, I'm giving you 2 shares. So the value of share will be declined. For example, if the earlier shares was 100, now 1 share value was 100. Now I divide these shares into 2 shares. That is 50 50 rupees, 2 shares. Recently, in a private sector, Swasti Group has done the stock splits. It has entered into four different businesses. Their earlier share price was 2000. Now, since they enter into four business, they divided the shares into four. Instead of 2000 shares, they converted into 500 rupees 4 shares. And this way, they increase the capital. Now, what is the benefit of this? We'll see in detail, but let just give an idea. If I divide the shares more, the quantity will increase. When the quantity increase, more and more people will attach to my company. Suppose it's a 2000 rupees share and I have to pay 10% back, then I'm paying 200 rupees. Now, instead of all this, I will do it that I restructure in 500 rupees. So those shares who are 10 years old, I'll pay them 10%. 5 years old, I'll pay them 2%. And new shares, I'm not paying anything. So I can take these decisions and manage my dividend, and indirectly I can manage my flow of money and firm's value. The shares buyback means how the company is repurchasing its shares so that maximum shareholding is limited to the promoter or the selected people. In the last, we have valuation of shares, where we are again going to learn about weighted valuation and simple valuation. Then, as I said, the most core part of this fifth unit is dividend models like Walter model, Gordon model, Moodle model, and Miller model. The name is mentioned as Moodle and Miller, but Moodle and Miller has a combined model and separate model. So there's two models. Third is Gordon and fourth is Walter. These all models were to study on three levels. One, what is their formula? What are their assumptions? What is their limitations and their practical applicability? So on fifth unit, you will find again we are learning theory. So in your second unit, capital structure, we have different models, and your fifth unit, we have a different models which we are learning about. Now let's go to the your core part, understanding the numericals and theory part about this subject. The first, they are saying the numericals will be asked on fund flow and cash flow statement. Till date, the numericals are not asked on cash flow because specifically they are kept this cash flow for the unit 2 of financial management in semester 2. But we'll do the practice more about fund flow, but we'll also consider cash flow as a practice session. Now, as far as all these numericals are concerned, I'm going to solve it online by using Excel method. If you are interested, you can carry your notebook and pen and solve when I'm solving it, and we can discuss. There's alternate way to solve numericals is on Saturday. You can come offline if you're interested, and we can solve these numericals also offline. But those who are interested, they should share the interest and they should attend the Saturday sessions. It should not happen that I'm coming on Saturday and the students are missing. The second numerical is theories of capital. Normally here they are mentioned PBIT and EPS analysis. So ratio analysis and return on investment analysis and leverage. So here they specifically given the leverage ratios are not for numerical. Only PBIT, EPS, ROI and RE. So how the firm value is decided based on profit, how the firm value is decided based on its returns, all these things are only analyzed in this syllabus. The third is sensitivity analysis in capital budgeting. So as I notified, we are going to compare the different part of capital budgeting. In semester 2, you just calculated one project or two project. Now here you have to give your judgment. This project is good because of this project is bad because of this. And that judgment is nothing but an scenario analysis. So suppose I have to go from our college to Swargate. I can go from Siagat Road, I can go from Katras, or I can fly from our college to the Swargate. So if the three route are available, which is cheaper one, which is easy, which is more convenient, which is less costing, and which is always available. So I do the analysis and decide from our college to Swargate how I am progressing. And based on that, I can take a call about my workouts. Then the last is receivable management, where we're going to talk about finance and refinance and all these things. So overall, considering this syllabus, you can find out the most of the time we are learning about the same things which we learn in semester 2, but the more progression is done. The new things in semester 2 is your economic value statement. Otherwise, all the things in advanced financial management are mostly covered as a foundation in FM2. Now, as far as the books are concerned, these are the list of books. I personally prefer Financial Management Theory and Practice by Prasanna Chandra, I M Pandey, and Ravi Kishore. As far as books are concerned, I am also an author of book called Advanced Financial Management by Praveen Thorat. You can refer to my book also, or we are already providing the notes unit wise. You can refer to that notes also. My dear students, they have suggested the two readings. In that, if feasible, please read Fundamentals of Financial Management by Van Horn, because this book is considered explaining the language is very liberal, and they talk about what is a core finance and how you deal with that finance. So overall, this is the syllabus you are going to study for your examinations. So far, any doubt about syllabus or anything like to ask for?
No, sir.
Okay. Now let's understand uh, what is the pattern of question papers they are going to ask, and how the things they have worked regarding advanced financial management. Now, for your people, the advanced financial management is still not completed, because what happens? Your syllabus is changed in 2025. So, what I can do is I can just share you the old syllabus question paper so that you can understand what is the kind of pattern of question paper is there. And whenever change is there, I will just update you the change. Just give it 2 minutes. Now, when you talk about This paper, there are multiple ways how you can deal with advanced financial management. You can first decide I should go with the theory, or you can think about I should go with numericals. But my most important suggestion is when you're solving the AFM papers, I'm sharing the screen. So this is 2025 paper recently happened. I'll just zoom it for your reading purpose. This paper was 50 marks, but for your syllabus, the paper will be of 60 marks. So you're allowed to use the calculator. And the most important instruction is assume the available data if necessary. So when you're solving the scenario analysis or all these type of numericals, you can have the assumptions. Now, as I said, the first question is state any two financial distress predecessors. So it is unit 1. Two objective cash flow, unit 1. Real life example of corporate restructuring, unit 1. Acquiring the company, unit 1. Portfolio restructuring, unit 1. Signaling theory of capital structure, unit 2. Objective buyback, unit 2. So if you can just see unit 1 or 2, they are asking in question number 1. Then when we progress further, in question 2, for your pattern, they will asking again solve any 2. Now here any 2, this paper is for 10 marks, but for your syllabus, it will be of 12 marks. And maximum time, the possible thing is that they will ask the questions from unit 2 or 3. So if you see strategic managing surplus funds, unit 3, dividend policy, unit 5, and LBO and advantage, unit 2. Then they are given the numerical on fund flow. As I said, they will not ask maximum time numericals on cash flow. They will ask on fund flow. In your financial management semester 2, you have the syllabus where they give the credit period is 10 months, debit period is 15 months, asset is there, liability is there, and find out cash flow. But in case of fund flow statements, the numerical will be given and they will mention you the different expenditures. I'll zoom in for making you readable condition. So here, instead of adjustment in number of weeks and periods, which you do in cash flow, you have to properly find out the corrected P&L account, change in working capital, and all these things. And we're going to solve all these papers. The next question they ask in question paper is about cash flow statement. Now, my dear students, it was lucky to have the cash flow statement, but be prepared. They will definitely ask fund flow statement guaranteed. The next numerical they ask about EPS and its analysis. Now let's talk about how the numerical is. Even though we're not started syllabus, let me explain in short. They are given the construction of your capital, the different contents of capital like equity shares, preference share, debentures, bonds, and so on. So your equity capital, suppose of 100 rupees, some part is loan, some part is term loan, some part is bonus, sorry, equity shares, some part is preference shares. So you have to find out the content of all this in detail. You have to find out what are types of equity capital, how the funds are raised, and the cost allocated to it. Then you have to find out earning per share. So first I will pay the all liabilities, and whatever the remaining money I will pay to my equity shareholders, and that is my EPS analysis. For example, I have profit of 1000 rupees, but I need to pay the tax of 100 rupees, so 900 balance. I have to pay the dividend to debentures 400 rupees, so 500 rupees a balance. I have to pay to preference shares 100 rupees, so 400 rupees a balance. And I have 4000 shares. So 400 rupees given to 4000 shares, it's hardly a 10%. So my earning per share is 10%. Now earning is 10%. Suppose the each person is earning suppose 400 and tax rate is 50%. In that case, the 400 rupees will not be given. I'll only give 360 rupees because the tax rate is 40%. So tax is not given. I'll do is tax deducted at source. So considering this scenario, my total payment to the equity shareholders is called earning per share. Suppose my earning is 240 rupees and price of share is 600 rupees. Then I had to find out after investing 600 rupees, if I'm getting 240 rupees, what is my return? And that return is your earning per share. Let's move on the other what numerical they ask for your examination. They are asking about net income, net operating income approach. So this is the most simple numerical. You will feel the name is very fancy and very critical. But my dear students, once you understand the fundamental, you will find out net operating income is the very best way to do it. Please remember, in financial management, all of you started study late. That in the end, I'll study and pass it. No. In case of advanced financial management, each day you need to attend, each day you need to work out and make a thought how you are going to operate about. Because unless and until you are practicing numericals in advance, you are solving numericals with me in online mode, or you are coming for offline practice, you will not able to get the confidence about these numericals. The second numericals they ask is the company has given all this detail. We required to find or suggest a company to policy regarding receivable management. Now, this is always being explained me in a class that we need to collect from debtors fast and we need to pay the creditors last. So, as a finance person, you are going to decide how much income and how much expenses, when, where, and why. So, this is one change in your syllabus because earlier syllabus they are not asking to advise. It was just a calculation where we have to find out what is the debtors turnover ratio, creditors turnover ratio, cash turnover ratio, asset turnover ratio. But now in your syllabus, they are asking you to comment and express your knowledge. So when it is 12 marks question, your 8 marks are given for your calculation purpose and 4 marks are reserved for your advice. The alternate to this is they are asking Walter model and they are asking to calculate based on Gordon model. So unit 5 questions are there. So this was an oral question paper which they have been talking about. So when you're thinking about your syllabus, you got 60-40 split where 60 marks is for your university examinations and 40 marks for your internal evaluations. Please remember, for your examinations, when 60 marks are there, it means 36 marks numericals are going to be asked. and 24 marks theory is going to be covered. So considering this, you need to practice numericals more and more. So far, I have covered the syllabus. I have done the orientation about AFM, expected type of question paper, and so on. Now, let's begin with your first unit and understand the first part. I hope my PPT is visible to all.
Yes, sir.
Yes, sir.
Thank you. The first unit, it talks about capital restructuring and reorganization. Now, what is meant by capital restructuring? For example, I have capital of 100 rupees and it is totally owned by me. So it is, I consider P as my name. So it is totally owned by me. Suppose tomorrow something happened to me. What will happen to business? Definitely it will pass to my successor. So I have two sons, A and B. So the money is going to them. They will have 50-50 or 60-40 or any other decision they will decide. Further, it will divided into more structure and so on. But this is limited to my family only. If I want to raise my business, if I want to go further, my capital need to be more and more. So more people will join my company as investors, promoters, contributors, money lenders, and so on. So how I'm restructuring my organization capital and understanding its impact on my success. Now, here success doesn't mean my volume. When I say success, I'm talking about the growth in terms of money, growth in terms of value of firm. Before I continue, let me explain the thing. What is difference between value of firm and growth? Suppose my firm has a profit of 100 rupees. If I give this 100 rupees profit to my shareholders, then my shareholder will be happy. But instead of that, I issue bonus shares of 50 rupees and I keep 50 rupees for further expansion. Then I don't require to borrow anything from market because I already have 50 rupees and 50 rupees bonus shares are given. So equity shareholders, they are win-win situation. And when I keeping this money, I'm thinking that my business should grow, business should continue progressive. And thinking this will help to increase the value of my firm. Now, sorry, earlier my capital was 100. When I issue bonus shares of 50, my value of firm will be 150 because earlier 100 shares plus new 50 shares, my value will become 150. If my 100 rupees able to generate 50 rupees profit, now 150, it will generate 75 rupees profit. So ultimately, my profit is increasing, my returns are increasing, and I'm contributing towards growing my asset holding. So that is called as increasing value of firm and growth. Whereas instead of giving bonus shares and keeping 50, I just issue 100 rupees to the all shareholder. What will happen? They will be happy because they are getting 100 rupees. But what about future? In case future I require money, I need to borrow from money lenders, different banks, or other agencies. And ultimately, this money will have interest or some return. And in all these cases, I need to bear an extra cost. And this extra cost will be again a loss to the firm. So when I'm paying dividends, to the equity shareholders without thinking to hold or reinvest. I'm just taking short term decisions. And when I'm planning about bonus shares, I'm planning about reinvestment in stocks. It talks about restructuring and increasing growth of a firm. A smart businessman or a smart organization always feels to reinvest its activities so that the firm's base value is higher and higher. So let's understand the basics of SEM. Now, why firms restructure? The first and foremost question, if my things are going well, why I should change? Why I should bother that my capital is reanalyzed? The first thing, if I'm in a phase of expansion, I'm thinking of changing my nature of business, extending my activities. For example, today I am just producing a tire. Now I want to produce a car. Or if I'm producing, suppose, milk, I want to go for production of paneer or any other more products of milk. Then I am progressing for much more products. So when I'm going with more products, more services, more challenges, I need restructuring. Second thing, sometimes the government issues a legal notice or some tax which my firm is going to be affected. For example, if I'm doing XYZ business, my tax will be instead of 10%, 40%. So what I'll do is I will divide my business in four types, five types, or two types, depend upon the feasibility, so that my firm is not recognized. For example, if I want to import the car from UK, I can get the spare part and assemble the car in India, or I can just get the same car in India and sold it in India. So if I sold it in India, my tax is 400%. But if I want to save the tax, I can build it from spare part and my tax is 160%. So to save the 240%, I can divide my organization in different levels. It's about to finish my session time. So just quickly revise. Today's session we discuss about our syllabus, the nature of our question paper, and we just started our first unit. So tomorrow again at same time we are going to discuss about the capital structure, then transformation and so on. What are types of restructuring and their benefits? So be there tomorrow at 7 a.m. for my advanced financial session. All students, your attendance is seriously monitored. And if you're absent, I'm going to call your parents directly. So be there for the online session. Keep your learnings and thank you for joining. Now you can log out and join the other session.